I'm not a registered or licensed financial advisor, planner, or broker, so nothing on this channel should be taken as a recommendation to buy or sell. I also trade all of these things, so I probably have a vested interest in there. But there's plenty of entertainment value and lots of education, so this will be awesome. For those of you who didn't know, my subscription channel is live. So look at the link in the description over at cryptoinfluencers.com, and you can see how I make all of my trades and what I do and what I think about everything. This channel is for more hypothetical and looking at trends, and the other one is for actual trading, so you might be interested in that. Okay, welcome to the live stream. I am attempting to live stream on Twitter, YouTube, Twitch, just whatever I've got. LinkedIn, we'll see how it turns out. So there might be a little bit of delay between making a comment and me seeing it, but we'll do the best we can. We're all just trying this all out for the first time. Well, let's talk about our day. Man, so we've been waiting to break above the 50. And yesterday we had talked about how we had waited 36 days between the FTX drop, which was our initial rejection for this segment here. And then we touched it again on December 13th. So that was 36 days. And then from the 15th, we left the 50 and touched it again on the 26th, which was 11 days. And then we left it on the 27th, and we just touched it a couple of days ago, and it was getting more frequent. The drop between touches was smaller and smaller, and our lines are becoming support. So today, we are at current stream, like live price right now. We are just hanging on. We are the 50 is at about 16,800, and our price is currently 16,820. We were doing way better until we had some kind of bearish financial news come out. I looked, and it was that some of the major Federal Reserve banks are not interested in lowering interest rates, that they'll probably either raise them a little more and then maintain for the entire year of 2023, or they'll at least be maintaining where we are throughout the year, end of the year. So people weren't too happy about that. If you see on the 1 minute chart, news broke right here, right exactly at on the hour, which would have been noon. And then we've kind of fallen off ever since. The S&P did not appreciate it, so it sort of dropped really hard. So Bitcoin still, it still moves with the rest of the market. Can't get away from that quite yet, but I still believe that once the market structure is there, it's going to matter less what the broad markets do, because if we have the right support and we've got some good solid movement, I think a lot of money will flow into crypto because it's looking for a place to go. So this is our current price action. Ethereum looks even better. So I know the people that have watched me for a while, you know that I've always said that when a line is important, when you've hit a resistance or a support that is very important, you'll either stop on it and then move above it in the next candle, or you'll have a giant candle to break it. Ethereum is doing that. It's breaking really hard. So we have a huge candle. It's not really being dissuaded by any of the negative news. James Roy, Happy New Year to you. Thanks for joining me here. So big candle to get through this. And then Bitcoin, it might, it could. It just depends on if we can get off of it when the market closes. So when the S&P and the US markets close in an hour and a half, we could, move up and have a big candle to break. Or we could close on it, and tomorrow it'll be the day that we can break across. Either way, I'm seeing this as extremely bullish. we've been waiting to get above the 50, and it is time. Even if we closed on the 50 right now, we're above the 20, which is a huge reason why Ethereum did so well. Ethereum kind of touched the 50, pulled back and found support on the 20, and then boom, here we are today. So if Bitcoin can get above the 20 as a step one, we could start getting in there. So yeah, crossing the 20 usually gives us about 14 days of whatever move it has. Well, if we have 14 days of a move on the upside of the 50, now we're talking. Like now we're going to get there. So we don't have that much further to go. We have our major point is about 17,800. So this is $1,000 higher than where we're trading right now. And if we have a close that's higher than this, this will essentially sell the market that we're looking for higher highs. It's not going to, it doesn't mean that we're just going to go straight up to 80,000. But what it will mean is that we'll probably hit 20,000 and we'll come back for support and we'll probably get it. And that's huge. Being able to project to the market that the downside has stopped and that we're moving into a sideways consolidation and gaining more strength is absolutely what we're looking for. So I'm really happy about this. If we closed here, I'd be totally happy with that. If we close anywhere above the 50, I'll be quite happy. But we're just gonna, we're gonna wait till this market finishes its thing. We've got 4 hours, 20 minutes left on Bitcoin market. And, a lot can happen. But what kind of gives me a little confidence is that I was looking at the 4 hour. Look how good this looks. So it was a couple of days ago that I was talking to the Pro channel and I said, hey, we finally exited the red zone on the 4 hour. That hasn't happened for a while. In fact, so we had the big FTX drop here and then a couple of, just kind of volatility attempts to get out. But once we start getting out of the 50, we had a pretty decent move. This was the move that really got us back to the 50-day moving average for the first time. And so then, we've had a rough couple of weeks here, but now we're exiting the red zone again. And you do this a couple times, especially at the same price point, and you've got your sideways consolidation in, and now we're ready to move. So this break is way healthier than this break. And this one already gave us a good move. So if this one does anything, we're in great shape. The cool thing is that back here when we exited the red zone, our 200 was really, really high above us and coming down. And it eventually got there and we got our golden cross and that helped us propel to higher ranges. But right now our 200 is really low. And just like the daily, when you've got when all of your averages are absolutely moving sideways, these just become stepping stones. They're rails, they're rungs on a ladder. And so we broke out above, I'll zoom in a little more, broke out above the 50 period moving average on the 4 hour and even climbed above the 100, which was decent. And then we found support on the 50, came back up to our range and then found support again here. And this became a bull flag. So this bull flag would resolve if we exit. Let me just get our distance. Whoops. So from the bottom of our flag to the top is about $200. And then if we take this from the breakout point, it should move up $200. And boom, we got it. So this is where we on the 4 hour chart we're building strength. And most recently we've kind of rejected off of the 200 period moving average, but we found support on the top side of the 50-day. That's what this thicker green line is. So we've actually pulled up pretty good and had a healthy support on the 50-day, this could keep us above the 50-day by end of day. So looking at our daily close from a 4-hour perspective, we're probably going to find support here. It might be, it could be a photo finish because we still have this 4-hour candle ends in 16 minutes, and then we have 4 more hours. So a lot can happen, but we're kind of creating another mini bear bull flag here. So things are looking pretty good. Cryptostopia. Cryptostopia. Thanks for adding a comment. He asked, how do you think the FOMC minutes will impact the market once institutions digest it over the next couple of days? I think that the market is, the thing is I think the only thing that really impacts markets is it's surprises. And I think that the Fed has done a fairly decent job of saying what they're thinking. Like, I don't think anyone's going to be surprised. Them coming out and saying, hey, we probably won't lower them for the entire year of 2023, that's what caused the markets to move just recently, just, literally 30 minutes ago, because that was new information. That was something that surprised the market. But I think that there's so much bad news out there. And and they've kind of followed through with every bad news thing that they were going to do. And because of that, the markets have reacted appropriately. Like, let me go to the S&P and just kind of show you on the weekly, ever since they were talking about all the tightening and all the things that we were going to do, the markets have dropped because of all of that. And they should, based on that. But the thing about it is that they've been so transparent as far as telling exactly where their targets are, what they're hoping to do, and what they've said they're going to do, they've actually done. And so the market has had plenty of time to digest this. And I think that's why we haven't seen the fall off that we've really seen. A lot of this gets priced in when there's transparency and trust in in whatever news is out there. It's the unpublished news that causes markets to really, really move. If the unpublished news is, this company went bankrupt all of a sudden, or suddenly, some other, if there's stuff that hasn't happened that no one's really aware of yet, those are the things that'll push markets down perpetually over time. Also, the one shoe that has not dropped yet is unemployment. If unemployment starts actually hitting, people start selling their retirements, taking tax hits, they'll sell their crypto, they'll do whatever it takes to keep their nose above water. Unemployment's probably going to affect the market in a way that we haven't quite seen yet. So I'm a little, I'm kind of keeping an open mind on all of those things, but just looking at this weekly chart, it doesn't look that weak to me. We've had no flip from resistance to support, and I've talked about this from support to resistance. The only one was here. We had resistance, flip to support, we broke below and found it as resistance. So this move here was kind of like a head and shoulders at the very tip top. Was the last time we did it. There may be an argument that our support here was resistance here, but it's a little sloppy. But there's no way you can say that this support butted up against this resistance. Like, we are definitely churning right now. And a churning is a sideways move. It's not a downward move. And so we have actual support off of the 200-week moving average, and we're moving sideways. And I just think that the market is responding the way they would when, sure, there's bad news out there, but there's no surprises. So that's kind of the way I think that the market's going to react, and I think Bitcoin is going to kind of come along the same way. All right, let's go talk about one part of Bitcoin that we have not done yet. So I've been waiting to talk about the monthly close. uh, for uh, for the first bit of this year. I kind of wanted to do it on the live stream. Dilemma, thanks for giving good vibes. I appreciate you being here. So let's take a look. We have, I'll just go to this chart because it just shows the entire movements of everything on a monthly scale. So every candle represents 1 month of information. And what we've been looking for, especially in a bear market, we're looking for a bottom candle. We're looking for something that says we are done moving down. And so if I zoom in on our current bear market, we started our move here. This would be November of 2021, looking for a bullish reversal. So we're going down here. This candle moved up past the 50% point. Because of that, that gave us another green month, but we didn't quite close above this. This was a potential, but it didn't quite get it. And then when we had a bearish engulfing candle, this move was completely wiped out and we were heading down. So this was a rough one. This one was extremely rough. This was what we were looking at as a selling climax this whole time. What we were hoping for was a repeat of this. If we could get a bounce above the 50% mark, we'd be in good shape. We did not get that. And in fact, we erased our gains, but our momentum had changed. So our increase in downward momentum we put the brakes on right here, which helped a lot. And then when this candle came along, I was actually it was very possible that this could have been a turnaround. It's the closest to a doji, and it was kind of, this monthly close was full of question marks. Well, the very next month we got a bullish engulfing candle, and more than 50% of the time these resolve as a move to the upside. So I was getting really excited with this. Then FTX came along and it kind of blew us up again. So I kind of look at the market structure that this could have been our turnaround had we not had sort of a black swan. And it's not a black swan, in the typical sense. I mean, there was the COVID crash, I've always said, was an amazing black swan, but we had lots of indication that the market was already weakening. Here, the indication was that the market was strengthening, and then it happened. And that's kind of what made it such a kind of a brutal outcome for traders, because there wasn't much in the charts to say that this was about to happen. It just sort of happened. And if you guys were watching the news and watching the whole thing unveil, like, it literally happened in 2 days. Like, it was super fast. So anyway, that's fine. This happened. This ends up not being our reversal. It sure could have been. This is probably our first sign that the bottom was near or very close. But this wasn't, this would have been our reversal formation, which didn't pan out. So now we're looking for another one. Well, look at this candle that we just published for December. And do you know what it is? This is an inverted hammer. It's not clean as can be because there is a little tail on this, but it's about as close to an inverted hammer as we're going to find, especially on a monthly scale. So it's red. So what does that mean? Let's go and take a look. This is an inverted hammer. I'm just on commodity.com. It was just the first one I could find that, you can Google these and it's easy to find. But we're looking at a longer upper wick and then little to no lower wick. So we've got, let's look at our candle and see if it measures up. It's pretty small. It's got to be little or no. And we didn't quite get the no, but we sure have a pretty small wick here. And then, is it bullish or bearish? Well, it depends on what happens before. So if this appears after a long downtrend, it's bullish because prices hesitated to move downward during the period. Sorry, my throat is not giving me very much help here. So sellers pushed prices back to where they were at open. So they've moved prices up. So the increasing prices show that the bulls were testing the power of the bears, and then in the end, it kind of didn't fully materialize. But this is bullish, especially if it's found at the end of a downtrend. And then the question, what is the green versus red? So when the open and the low and open are the same, a bullish green inverted candle is considered stronger. A red is weaker. So it's not the absolute like best thing ever. Of course, they'll show examples of, all of that. But the truth is, we have something to point to. It's the first thing that we've got that says, okay, this could potentially be the candle we're looking for. This formation would have been it, but it wasn't. So now we keep looking, and we found another one. And this one has a decent shot. An inverted hammer at the bottom of an unbelievable bear market. Also, during a Bitcoin bear market where we know the 4-year cycle is around, the timing of this is perfect. We should be finding the bottom at about this stage in the game. So what's interesting is, let's just see if there are other cases of this formation being our candle bottom for a cycle. Well, look at what happened in 2018 and 19. The last candle, like this was the bottom. This is the reversal candle that you would point to. But before we had a green month, we printed, I should zoom in on this, huh? It's not textbook, but we did have an inverted hammer that got us out. So this inverted hammer gave us the bullish engulfing candle next month, and that got us off the bottom. Like that was the end of 2018. So is this normal? Well, look at this. So this was our bottom for sure. This was our selling climax. It absolutely gave us the bottom. This was weak. We didn't get above 50%. And because of that, we ended up having another sell-off. The sell-off was super weak, which was awesome. And that's what kind of, gave us the move to the upside. This started us really getting going. But look what happened right before we had our green month. Look what we've got right here. It is a inverted hammer. Like, it's unbelievable. Like, you wouldn't have even seen this if you weren't looking for it, because the bottom happened here. And all of the TA specialists and everyone that talks about where things are going and where we've been and where we've come from, they're always looking at this bottom, and they're looking at, kind of what happened leading up to it. And they would point to this bullish engulfing candle before they would ever look at a inverted hammer. And they would certainly point to the actual bottom and say, hey, we had such a long wick here that this was a support wick. This moved us on. But what is kind of unbelievable about this is that we have every single bottom. Well, okay, so the last two, I can't say every single, because we're not quite, we don't know if this is it, right? But we had an inverted hammer right before we started our move, where we had our first believable green candle. We had an inverted hammer right before we had our first green candle that gave us a bullish engulfing candle to move us on. And right now we have just printed an inverted hammer. So for all of us nerdy TA guys that just drool over this stuff, this is exciting. And I've been watching this and trying to bite my tongue for a few days because I really wanted you guys to be here and see this and kind of talk through it together. And what's cool about it is that so far it hasn't taken us long to start having some green on our new month. We have to ignore this though, because it's almost irrelevant with only 3 days in. But this is something that could potentially move us up. The beautiful thing about an inverted hammer is if it's bullish at all, it sets us up for a bullish engulfing candle. And that's the stronger signal. Bullish engulfing candle is going to beat an inverted hammer every single day. But the inverted hammer gives us a small body at the bottom, especially a red one. Small bottom down here that's easily surpassed by our next month. So even if we have a mediocre month and we end at like maybe 18,000 or something, this is going to be a massive bullish engulfing candle. The body will be way bigger than our prior, and all of the armchair YouTuber technical analysts that are out there, they'll suddenly notice that something good is happening. And by then, all of us, especially on the pro channel, like we're all locked in, like we're ready to rock and roll. A move to here would already be ridiculously profitable. And then when the rest of the bandwagon shows up and gets us out of here, we're going to be sitting pretty. So there's some pretty exciting things going on with Bitcoin. The other thing, I figured I'd just talk a little bit. So David Ara, thank you for commenting. Happy New Year to you and everyone else as well. I think we've got an exciting new year coming. So I'm going to go to the daily chart, and I kind of want to talk through the quote unquote failed bullish engulfing candles that we've seen, right? So what's interesting about a bullish engulfing candle hasn't really failed until you start trading below. So our first bullish engulfing candle that we even had after the FTX drop was right here. And it resulted in a big move. And then we kind of had bearish engulfing, bullish engulfing. They were both kind of like trading places. But this was kind of the move that started us off, and it moved us up into these upper higher ranges. Well, the next time we had a bullish engulfing was here. And this particular bullish engulfing served to put the brakes on this drop. We were dropping pretty hard after touching the 50 right here. So we dropped pretty hard. We kind of hit the brakes here a little bit, but we were still moving down. If this candle had been weak, we could have fallen apart pretty bad. So this bullish engulfing comes along and pretty much puts the brakes on this move here. Well, the interesting thing is this bottom did not invalidate our bullish engulfing here. So this bullish engulfing is still in play. It's still fueling a move to the upside. This is technically to the upside. And this line here that I've drawn to show increasing support, it passes the wicks of this bullish engulfing, and it's still in play. This bullish engulfing is not going to be invalidated until we trade below here. And we were waiting for a move. Like the upside should have been more explosive, except we had just come off of this move so hard. So this almost got, this bullish engulfing almost absorbed the downward pressure of this move. And so now we've kind of neutralized it. And in fact, we neutralized it so well that we went sideways for 7 days. When we finally had a chance to start breathing and moving to the upside, we hit the 50 and we kind of fell apart again. But our bullish engulfing is still in play because we haven't had a body below it. So we're still feeding off of this. So we've got 2 bullish engulfings that are kind of fueling the bottom side of our support. So now we're moving ahead and we find this bullish engulfing. Well, this bullish engulfing is higher than this bullish engulfing, and so this one is technically still fueling a move to the upside. This one's still fueling a move to the upside, and this one now is fueling a move to the upside. And now that we've kind of got all of this upward support happening, and that's shown by this increasing line right here, it is pushing us up to a place where we can finally break the 50 today. So this is kind of culminating here. And the complete outcome of this will be felt once we start breaking these old resistances. So we have created a resistance, or at least discovered a resistance here. And this is the first one to break. If this breaks, all of this momentum is just going to really, it's going to blossom into some nice price action after that. So that's kind of what we're looking for. David R. says, hit the like, guys. Push the channel, please. This man appears honest. I appreciate that. I hate to be one of those stereotypical guys that's whining about, hit the like and all of that. I think it's cheesy. I do this because I enjoy it. And if anyone wants to come along for the ride, you're welcome to. That's kind of my philosophy. So he says, I'm thinking the Fed will pivot on March or April. I think pivot being, they've just announced that they are not going to lower interest rates. So if pivot means they're lowering interest rates, we may not. But if the pivot means that we've stopped increasing the rates, I believe you. I bet we're there. They're going to probably raise it this next maybe 1 or 2 times, and we're done. So we're getting really close on that. That will impact the markets for a long time, though, because that's one of those things that, that's, even though it's out there and it's planned and everyone knows about it, when a loan comes due in 6 months and people have to refinance at a higher rate, people make new decisions, and you can't fully price in all of those outcomes until, till those loans run out or whatever. So if businesses are doing short-term, like 6 month to a year loans, and they're going to have to refinance at a higher rate, we're gonna see more squeeze on the economy. And so maybe those things haven't trickled all the way through. But anyway, interesting stuff. So yeah, I am so excited that today is the first day that we have a solid chance of breaking the 50. Like we are getting there. The 50 was still dropping when we touched it here. So on the 26th of December, our 50 was still falling. And when we rejected, it was still pushing us down until the 28th of December. And now we're going fully sideways. So there's no more downward pressure. It's just sideways. And we're just kind of recovering structural wise, and then looking for a chance to get above it. And here we are. Like this is just a formula for upside. Like this is so cool. One thing that I wanted to point out that is, I don't look at wicks with too much importance. I look more at the bodies, and we can't fully analyze this because we still have 4 hours to go. So if we're not going to be able to look at the body and analyze what we can do and what is in the books, look at our high for today. Our high is 16,989. Our high on this day was 16,968. 16,968 again, and this one's where we cracked 17,000. So we have not had an intraday high as high as today for over 2 weeks. So that is also positive. Like we are touching resistance and breaking through levels that we haven't seen for a couple of weeks. And so there's still momentum being built. Even if by end of day we cooled off and we were just below or just right on the line, I would still see this as a decent outcome. If we lose the 20 by end of day, it's starting to look ugly. And if we were negative or red, it would be like, okay, well, that was definitely a failed attempt. So we're not out of the woods. We got to close this candle. But currently as it stands, this is a very, very pretty looking thing. Padero Mountain Biking. Much love, man. Didn't have the opportunity to welcome you back to action, but I've been enjoying the content ever since as before. Different times, same quality content. Cheers. Yeah, for some of those who don't know, thank you for saying that. I used to do a channel years ago. It was I was kind of rebranding a company called CoinBook, and I was just kind of working on trading and um, auto trading with bots and different things. And um, then I left for a while because I was working for a company called Humble and doing some things with, just different things. Didn't quite work out the way I was hoping though, so I had to kind of step away. And I'm back doing what I love the most, so I do not plan on leaving. I'm going to be here just nerding about markets and charts for the foreseeable future. Blueberry, thanks for your comment. Could be a sweep of those highs. Possibly. So we may be taking out resistance that's just above these highs. One reason why I don't trade on wicks very strongly is because this is a very typical institutional move. A lot of novice traders think, oh, the wick is the most important point because we've never traded above this dollar amount. And so they will put stop losses just above that wick, or they will put in a long buy. So, oh, if we break this, then there's probably so much momentum that it's time to go long. And institutionals, they will manipulate markets and they'll raise the price just above just to hit those stops or trick people into entering a position. And then they reverse the market on you. So the solution for these types of manipulations is to increase your time frame. You want to, the higher the time frame, the more important. So when I'm looking at the monthly chart and I'm seeing reasons to suspect that the markets are changing, this is going to speak louder than the weekly. And the weekly, but to be honest, was looking really ugly at the end of this week. This was not pretty. But the monthly was showing more strength than the weekly. So it kind of gave me more confidence because the higher the time frame, the more important the trend. If the weekly ends up having a bullish engulfing, it'll probably give us the strength to hit this resistance. So anyway, the weekly can turn based on the power and strength of the monthly. And then daily, these are, these will not be as important as weekly or monthly. So the longer the time frame, the safer your trades could be. Are we going to close the daily close above 17,000 today? Thanks for your comment, Blue Sky. That's awesome. I hope so. This is where, if I'm trying to figure out where a day is going to end, I have to look under the hood a little bit to like a 4-hour and a 1-hour. We just finished this candle, super volatile, and this was manufactured because of news that came out. Honestly, it wouldn't hurt my feelings if we didn't break 17. We have a bull flag in the works, so it could happen right after a candle that looks like this. Probably not. So we probably won't hit 17 today, but I wouldn't rule it out over the next few days because I think we could come back easily on the 4-hour and find some kind of support. I'm hoping above the 50-day. In fact, even if we close above the 50-day, that could be the move. Like we could do it right away at end of day, because breaking the 50 and having a solid close, it's huge. People with money are going to be looking at that very closely. Great question, Blue Sky. Appreciate that. Let's see, Blueberry, no more CoinBook. Thanks for the shirt. You know what? It is possible that eventually we may have merch again. I've been talking to cryptoinfluencers.com, and they are working on all kinds of things. And I do have some nerdy phrases that I should add to a shirt here and there. So it would be pretty fun. We need to... Anyway, it would be fun to make this more of a club, That's kind of the way I looked at CoinBook. It was just kind of this group of people that were so nerdy that in the bottom of a bear market where everything was falling apart, we were still interested in every single move and drinking in everything that's happening in crypto. And that's just kind of the way I am. And if I surround myself with people like that, I'm a happy guy. So cheers to you as well. Yes, the club for smart people. Guys, Bitcoin is the thing. It is the thing that changes. This is what fuels the entire crypto market. Ethereum looks phenomenal. And Ethereum is making moves, projecting strength in the overall market. Ethereum falls apart really fast when Bitcoin falls apart. We saw that. And it will continue. I don't think it's strong enough to stand on its own yet. And so if Ethereum is this excited to break out and get moving, all Bitcoin has to do is give us permission. We just need to close above the 50, and the rest of the market is going to get hot. It's going to be awesome. So good times. But yeah, I didn't really look. Well, let's do one last thing. There are a couple of other time frames that are worth looking at. Let's look at the 3-month. So this was on the news over the past while. Bitcoin has never had 4 quarters in a row that were red. So this was barely red and this was barely red, but it is technically 4. We've had 4 green, but yeah, so every time we've had 3 and then a break is when it comes to quarters. And yeah, quarters, there's no formation here. Like I wouldn't consider this a trend reversal. This one is a little closer, but not quite. It still has a bearish tail on it. So I'm not entirely sure where we'll end up in the quarter, but this is neutral. This isn't saying we're going up or down, and so but there's a lot of wiggle room here. If over the next quarter we pulled up to 20,000, like suddenly we'd have a bullish engulfing on the quarterly, and that'd be pretty sweet. Let's take a look at the 6-month. So 6-month candles are going to be a little bit more just gigantic because there's so much money moving over a period of 6 months. But yeah, so we had a three back-to-back 6-month back in 2015. That is brutal. That is a long time to be in a bear market. And then we were rewarded by the suffering for 2.5 years of upside here. And then a 1-year bear market, a 6-month drop till we figured out what we were doing, and then we had 2 years of upside. So now we've got our 2 6-month periods down. We've got a bearish engulfing here, and that pushed us down, but the momentum has decreased. This is definitely a much smaller outcome. In fact, it's slightly, I mean, it's not quite, but this is kind of a inverted hammer as well. So that's kind of interesting. And then because we just ended the year, we should look at the yearly close. I'll move all my drawings because these are getting a little messy. Here's our yearly, and everyone was pointing out that on the yearly scale, we've never had 2 red years in a row. Never. And I don't expect that we will. Like, I don't think by end of 2023 we'll be down in the dumps. It would be a unbelievable black swan. I just can't even imagine us being red next year. It'd be really hard to say. So yeah, which means we've got a good year ahead of us. You know, even if we struggle and put a tail on this, that's fine. You know, we can do whatever we want. But as far as timing wise, we put in a brutal year, and there's a lot of upside that could still happen. So not much more to say besides this is a bearish engulfing. So if there was ever 2 red years in a row, this would be the year to do it. So, but you know, I just don't think we're there. I think Bitcoin is a scarce commodity. I think that by now there's so little being traded, and individuals and retail are pulling Bitcoin off of exchanges in record numbers. I just don't think there's enough Bitcoin to go around for people to be dumping them, on the market willy-nilly. I think the believers are here, and people are buying at these levels. All right, we'll just go through a few last questions, and then we'll wrap it up here. David asks, what do you think about Solana? Well, this is what I think about Solana. Where are we at? Solana. So I've currently got a long position in Solana, and Solana has exited the red zone. This is usually a long-term entry point. Our last entry point was here at $32, and now our entry point is $12, $13. So we have the risk reward that is here is way higher than where we were back up in here. So if we're patient and let Bitcoin break out and then enter alts when they make sense, I think this is a pretty decent trade. So yeah, I'm long here. I think I entered my long when we consolidated for long enough, and then I kind of had to hold on to my hat while we did this move. But we're still right in there, and this move above the 50 is positive for me. So I'm keeping this position, and I expect that I think it'll do well, especially long term. Things could definitely change, but when I see a market fall off for like 3 weeks and then in 2 days our losses are evaporated, there's money here. There's interest. There's not only interest, but there's money and resources that can change the direction of this, and they are in this market, and so they can change the shape of this for sure. And I'm not trying to push markets around. I'm trying to react to them, but there are people that can, and that's kind of what I try to do. I try to get behind the people that are moving the markets. If I can align myself with whales, I'm going to probably make money. So that's where we're at. So yeah, everyone's lost money this year, but this upcoming year, that's the cool thing about Bitcoin. You go to, this yearly chart really does tell it all. You really have to deal with a year of a brutal bear market, and you just have to suffer through it. Like, there's no way around it. You just have to live through it. Once you've lived through it, usually this first year, everyone's scared to death. I'm so excited, and it's because I've done this 3 times. I started crypto back in 2012, and I watched the first move happen, and then I experienced my first bear market in 2014 and 15, and it was rough. It was so rough because I wasn't emotionally ready for something to lose 90% of its value, and especially when I'd experienced this move, like, it was wild. And so we dropped for a year, and I was a little nervous. I was still buying at like 300 and 500 and whatever I could. Yeah, it was up in here. But I missed the 200s and 300s because I was like, I couldn't stand it. It was too hard emotionally. Well, then the 17 market came along, and I knew it was coming, and I was way more prepared for this bottom. And now I'm like overjoyed. I'm like so excited to see, like, this market was brutal, but I am actively hunting for that bottom because I know it exists. And I know that the upside for the next 3 years is unbelievable. So if I can position myself now, I'm not going to miss this boat. And so that's kind of where my mind is on this market. All right, no stop loss on SOL. That looks like a 40% drop. Correct. I don't like whales tapping me out of my positions. If you join the pro channel, I'll tell you exactly what I do and what I think about it. But if I put like, maybe let's say I put my stop loss at the bottom of this wick or the bottom of this candle body here, I enter a position up here and I'm like, okay, I'm going to totally get stopped out down here. There's no way it'll do that because I think I'm right. I would have totally got stopped out. Would I have bought back in? No. I wouldn't have bought back in. Maybe here, but by then I've already lost money. I'm more willing to be patient. So in order to handle a drop like that, especially when I'm trading on leverage, my position sizes are really small. They're so small that I can handle a drop to zero. It wouldn't liquidate me. But when it does drop, I have ammo available to buy in and average down and do whatever I want to. And so I would rather ride this than have whales stop me out of my position, because these things are volatile. Like look at this day here. We had a high of $10.83 and a low of $8. Like this is a 50% move. Like it's not that much, but it's a huge move. And anyone that had any stops or anything available, even in the room, in the vicinity, they were liquidated. And so my thought is, I'm not going to fight the whales, but I'm not going to let them take my money either. And so I'll keep my position small, and I'll keep pretty diversified, and I'll let the market go against me. And I just have the stomach to handle it. I don't mind being upside down because I know eventually I'll be right, especially when I'm buying at the bottom of the bear market. All I have to do is wait, as long as the market makes sense. You know, I don't want to be buying something that looks like almost any of these, but Maker is a beautiful example. Look at Maker. It's just one day after another. Like this thing cannot find its bottom. I'm not buying this, but I will buy it if it finally finds a bottom. And in fact, I'd love to buy it when it finds a bottom at the bottom of a bear market, because on the other side of this, if it keeps bleeding off, it doesn't have to move very far, and I've doubled or tripled my money. Like I'm super happy to sit there. What if I had made a mistake? What if I bought in at $900 here and it drops to 300? Sure, this position is pretty rough, but if I have a new position available at 200 and that thing just, moves to half, I've not only broken even, but I've made money on this transaction. And it just, I'd rather not get stopped out if something moves 10% against me and then takes off. I'd rather live through the 80% down. It's just my philosophy. It's not a comfortable way for new traders to enjoy a market, but it's been a little bit. It's just the way I've done it. It just takes a lot of self-control, self-mastery, a lot of faith in the system, faith in markets, knowing that markets never go one way forever, and it takes risk management. Because if my position size is too big, I could blow up my account. But I'm not in a place where I will blow up an account. So there's a lot to it. Yeah, on the pro channel, you'll see exactly how I do it. If you're interested. Do I think BTC is going down more? Let me look. You can't always look at one side, right? I'm definitely anticipating the bottom coming in because of timing, because of living through this, because of trading Bitcoin for 10 years. I'm fairly experienced in it. But could there be another shoe that drops that I don't see? It's possible. I also think that we'll see it in the charts. Whenever we move below the 20 for a sustained period of time, it heats us up. Like I would be much more nervous, and I was starting to get a little nervous about this until we had a bullish candle here. This close wasn't super comfortable. Like when we're rejecting off of the 20 and we're getting close to these lows, I do get nervous. But we're about to cross the 20 and cross the 50. And so even if we were to go down, I still feel like even over the next couple of weeks, we've got some upside. And then we can kind of see where we land at that point. So I'm kind of looking at things fairly short term, but I don't like to make rash decisions and overtrade. I'd rather undertrade than overtrade. And that's kind of the way I think. Manish, welcome. Hey, Calvin, great stuff as always. Could you take a look at the AI charts? Oh, yeah, let's do. And I got reprimanded by actual AI scientists that this is a pattern matcher. So it's not an AI. But let's look at it. We are on, let's see, the 4th. So this is, I'm going to put in a temporary day. Let's just put in today's price action. Okay, so we opened at 16,675, high of 16,989 so far. So I'll update this again once we get to the actual close. And we're currently trading at 16,841. All right. So I'm gonna save it before I update. This is where we closed yesterday. And my chart just loves to do this. Bring to front. Sometimes that does it and sometimes it doesn't. Okay, that helped. All right, so this is where we ended up at end of day yesterday. And so the closest match, see, our variance has improved a ton because our FTX drop is more than 55 days old. So since that drop is no longer playing into our averages, now we can actually look at what is our most recent price action really telling us. Well, from just a window of data here, you can see that we have a bottom here. We've got rising support here. We had a kind of an attempt at moving out, but then we were rejected and pulled back, but we didn't pull back lower than where we were trading originally. So the shape of this shows a slow move to the upside. And our closest match was July of 2020. And so here's a bottom. We had a kind of a low and a bottom, kind of a failed attempt. And then we've kind of pulled back, but we haven't pulled back as low as we were before. And so according to this, it's thinking that we're matching up to have a breakout coming up here. And this is exactly what I'm planning. Like that's the story that I'm expecting. This is another match which, according to the data points I've used, it's a match, but it's questionable. 2014, this was, it's hard to say if this was much higher than this. See, this is where I get nervous. If we were to pull back to our lows, like you can barely see this. Let me pull it up higher. If we get too close to our most recent lows, that's when I'm going to get nervous. This scenario could play out possibly if we get too low. So as long as our support is increasing, we're in good shape. If we start losing lows, that's when this scenario could play out. But anyway, so this is the results of yesterday's close. If I add where we are currently, so I add this green candle right here, all of our data is going to change. Okay, our variance just shot up. So we're at 12% variance instead of 8%. And this is our closest. Okay, that's really encouraging, huh? This is our closest match. I just don't think it's a great match without, unless we kind of found more support and we start losing it. So I don't know. I guess this match is not having a very great outcome. I think if we get above this resistance here, we'll probably have a better look. But anyway, this is kind of what it's looking like right now. Don't know if that helps or not. I don't know if we're quite doing this. When you scale out, well, you know what? Part of the problem is that we still have this day here. This is still part of the oscillations of FTX. So it still looks like we're showing weakness. In a couple days, when we're kind of down in this zone, it'll show that we're more flat, and things will be looking a little bit different. We're still kind of pointing down if you're taking this data point into consideration. So who knows? I'm not sure if it's a perfect match or not, but interesting either way, and we'll keep that going. Yeah, that was helpful, wasn't it, Manish? All right, so what are you using for your formulas, neural networks? No, I'm just matching. I'm just taking every Bitcoin close in history and grabbing data points from our most recent 55 days and finding the closest match to what we did in the past. So it's just we're just matching it together, and then what happened next, and that's kind of what I'm doing. All right, very cool. All right, I think that's about good for today. We've gone just 1 hour. Thanks for being here, everybody. I really appreciate you being here, asking questions and interacting. Makes this really fun for me. So, but yeah, we're gonna get there. This is our first day where we've spent most of the day above the 50, and if we can break it, man, we could really get going. And yeah, it's interesting because normally you're exiting a red zone. And a red zone means that all of your price action is below the 50, which is decreasing. So normally a red zone is a falling market. So when you exit a red zone, you're actually, you're kind of reversing a trend. You're like pulling away from a trend. Well, now that the 50 is so flat, and in fact it's been sloping up for 3 of the last 6 days. Like, this market is quiet. So I would consider a break here as being stronger than a break of a red zone, because a red zone, you're actually fighting a declining trend, where this trend is like, it's all worn out. Like, I feel like the bears are just exhausted. So this move is really looking nice. And then when you add in the trends, you can see our downward momentum has completely changed. If we were still moving down at the same pace, we'd be under this line, but we're not. In fact, we're above all of our lines. So there is momentum here. It's just hard to see from an untrained eye. Okay, I'm going to call it there. You guys are so awesome. Thanks for being here. And thanks for humoring me and joining me on my test of the trying to live stream in multiple places. So anyway, all right, we'll catch y'all next week, same time, same place. Thanks for making it to the end of my video. Make sure you keep those trades small. Don't force a trade. Don't get impatient. And if you want to see how all this works, please come over and check me out on the subscription channel at cryptoinfluencers.com. Again, the link is in